If every budget has always failed you, I promise this is the solution. So have you heard the saying in dating, it's not you, it's me? Take that mentality. So if every budget hasn't worked, then it means the common element is you, not the budgets, right? So you're either setting yourself up for failure, you're not being practical, or you're not being honest with yourself on what is possible. Any of those things are going to lead to you not having a successful experience with budgeting. Every single person in the world has a budget, or they have so much money they don't have to worry about anything. Like, that is just the way it is. So having a budget looks different from person to person. And so for you, what you might need to do is just look at how much money you owe and just get real with yourself. You know, it's not going to go away. So look at it and think, okay, I owe this much here, this much here, this much here. Write it out and look at it. Look at how much you pay per month, how many payments you have left, how much you're going to end up paying back by the time you're done paying that agreed upon amount of debt. If it's a credit card, look at how long it would take to pay off on the credit card statement if you're just to pay the minimum. Just get really, really honest with yourself on where you are. Once you've done that, the next step is you're going to see how much money you're actually making. If you're employed, it's super easy. You get a paycheck, right? You just look at it. If you are self-employed, this is where it takes some effort to figure it out. You either are making money consistently or you're not. If you're making consistently, treat it like a payroll situation. If you are not making money consistently, that's like a whole nother situation where we have to look at how we're going to make your income more consistent, which we will work on. So if you shouldn't jump into making it consistent right away, you're going to work on it kind of like simultaneously. However, what you are going to do is you're going to look at your worst month and you're going to base everything off of your worst month in self-employment, not your best month, okay? So at this point, we know what your expenses are. We know what your income is. Not your best case scenario income, your worst case scenario income for these purposes. The next step is we're going to see how your payments are set up. So when do you get paid? How often do you get paid? When are your payments coming out? Looking at it on a calendar to see exactly what is going on there. Sometimes your payments are coming out before your income is going in. All that is super easy to change. So you're going to know if any payments need to be changed. You're going to write that information out. You're going to know how much your payments are. You're going to know what all your interest rates are. And now you're going to call every single one of your creditors. And this is not daunting. They get these calls all the time. If you don't want to talk to a person, use one of their chat bots. And you are going to ask for a lower interest rate. You're going to change your payment date if need be. And you're going to see if they have any kind of specials right now. And a lot of times, if you've been with them for a while, they can offer you 0% APR for 5 months, 6 months, whatever. You can also tell them that you're looking into switching over to a competitor who is offering a discount right now. And what you can do is you can usually get some sort of, reduction. Now, when you transfer your balance from one credit card to the next, there is a transfer fee. So I don't want you to ever think that you're going from paying nothing to something, because if you keep on transferring and you're not paying down the debt, you're going to end up in a worse situation, because you're going to have like that 3%, 5%, whatever the percentage is added on each individual time. So you're going to call the creditors, you're going to see if you can do anything, you're going to look into consolidating whatever you can. So like with student loans, consolidating, see what you can do with that. And then after that, you're going to have the best interest rate you can, you're going to have the best schedule of payments that you can, and then you're going to start working on paying down the debt. So there's a couple different theories with this. So some people believe that you should have a emergency fund of $1,000 or emergency fund of 3 months or emergency fund of 6 months. For me, I think you need to look at your situation. Are you driving a new car or driving an old car? If your car is older and could need repairs, you should have more set aside, because things could happen. If it's a newer car, you can have less in your security fund for right now, okay? Are you renting? Are you owning? If you're renting, you don't have to pay for the repairs on your home. If you're owning, you do. So you need to have more money set aside because things break. So there is no one size fit all. You have to be very aware of what's going on in your life. And if you don't know what to do, you need to ask people who are in similar situations, not the random person, but if somebody has a similar car. I've gone to the dealership before. So I've gone to the dealership before and asked them, what kind of repairs typically happen with the car I have. So I was looking to buy a car. I was buying a car because we used to live on a barrier island. We kind of still do, but the house is unlivable. Long story. So anyways, I got a car with hydraulics in it because I wanted to be able to elevate out of the water if like a flash flood occurred. And one did, and we were able to get out, and I'm so thankful I had that car. However, I was told that if I was buying that vehicle, I needed to buy the extended warranty, which was quite a lot of money because when things break on my vehicle, it is extremely expensive. Something did break on my vehicle and it was covered under the warranty, and if I hadn't had that extended warranty, it was going to be $7,000. That's a lot of money to come out of pocket, but I had pre-planned for it. So look for things like that. Where can you pre-plan? When we were up in New Jersey, there are a lot of potholes. I must have blown out the tires on my car. I think I replaced 8 tires on our car when we were living there up near Jersey City or in Jersey City. And so at that point, I looked at the price per tire, and I'm so glad I had bought the tire package because we had run flats on that vehicle. And it more than covered the extended warranty I had on the tire package, right? So look at things that maybe you're paying more money up front, but it's gonna save you money in the long run. And that's simply knowing what happens historically with your vehicle, with your home, with whatever it might be, right? So it's pre-planning. So it's not always about saving money, it's about using money the most wise way that you possibly can. So let's go back to the creditors. A lot of times with the creditors, they're willing to accept less if you're behind. They're willing to lower or do a payment plan. They don't want you to go into default because that means they're not getting that money back. So they're very open about working with you. The truth is, or the key to success is being truthful. You have to be truthful with yourself of what's going on, and you need to communicate with who you owe money to. You made a commitment to them, and you need to be truthful. If something happened and you have a solution, tell them the solution. The worst that they can say is no. I guarantee you they want to work with you in almost every situation. There are some creditors who really don't care. I'm definitely agree with you on that, but if you're nice to them and you tell them what's going on, they a lot of times have different kinds of plans and strategies that they can share with you. So you're going to do that. So we've got the creditor plan. We're talking about the actually saving the money. So when you look at what's going on with your credit and with your debts and things like that, you realize, okay, how much am I going to save? For me personally, I think that you should have at least 1 month saved up in case of an emergency. That means if you had absolutely no income coming in, you'd be able to pay all of your bills for 30 days. That's not always feasible. Sometimes all you can save up is, say, a month of your rent or your mortgage. I highly recommend having at least that because there's nothing more scary than not knowing where you're going to live, especially if you have kids. So think about what it is that you need to know, that if you had no income for 30 days, what would you really need right there, okay? So as you have this plan with a debt, you have a plan with how much money you're going to save up, you know how you're going to be using your money the best way possible. The next part is, how do you pay down the debt? There's a lot of different strategies. I'm going to tell you, I don't think there's a right or a wrong way. I think that you just need to commit to a plan and go with it. I personally really like seeing people get excited about paying down debt, and so one of the ways you can do that is the snowball method, and like there's so many people who talk about this. So what you're going to do is you're going to line up all your debts and how much you pay on each one, and then what the interest rate is on. And remember, you just renegotiated that, so your interest rates are going to change from when you started. Pick the one where you're paying the absolute highest interest rate, and you're going to pay as much as you can on that particular debt, and then the minimum on everything else. You might have even already negotiated where you're going to pay less than the minimum with your creditor as long as they approve it for maybe 6 months or a year, letting them know that you've gotten into a lot of debt and you're trying to pay it down, and tell them your plan of how you're snowballing the debt. And a lot of times they will work with you and lower those minimum payments. So you're going to snowball, you're going to pay off one debt, then yay, that one's paid off. Then you're going to transfer that money and pay down the next one with the highest interest rate, and so on and so forth. Another strategy that works is some people will just simply look at their debts and the amount owed. Okay, so you look at the amount owed and you start off with the smallest balance. And the point of this is you want to pay off a balance as quick as possible, doing the same kind of snowballing idea of where you pay minimums on everything, but the one with the highest balance outside of your mortgage, do not put that in this kind of category. This is for unsecured debt, so credit cards, personal loans, secure debt in the sense of, I would say in the sense of car notes, and then student loans. We're going to talk about those in a totally different moment here, okay? So you take the one with the one that you owe the least amount of money on, you pay that off, then you keep on paying the minimums on everything, but the one that had the second largest balance, you're gonna start paying that one off. And that one, again, you're getting a sense of success, right? You're paying down that debt. So that is how you get out of debt. And then once you're done getting out of debt, you're then going to do a reassessment, and you're going to look at your home, you're going to look at your vehicle. Does you need to save up money for repairs? You should at this point move from focusing on the debt, and you're going to focus on planning. So you're going to need your separate accounts on what you're saving for. You should always have an account for the car repairs. You should always have an account for medical reasons. You should always have a savings account for home repairs, right? And you just keep on saving that money up. I personally really like high yield savings accounts. There's a lot out there. At the time of producing this video, people are running specials right now from anywhere from like 3.9 to 5.5% for limited time, and then it ends up being well over 3 or 4%. This is always a changing thing. Sometimes savings accounts are good. Sometimes high yield savings accounts are good. Sometimes there's minimum balances. Sometimes there's fees. You just always have to assess and never assume that what is in place right now is what's going to be in place forever. When it comes to finances, you can't just set it and forget it. You need to keep on reassessing it. So things like checking accounts don't change all that often, but you should check in to make sure things are getting paid in a timely fashion, right? Loans, keep your eye on a pulse, like see where the interest rates are. Maybe it makes sense to refinance your car. Maybe it makes sense to refinance your house. You have to look and see. You got to check in on that. You shouldn't be pulling credit all over the time just to see what the interest rates are. You can simply just Google it and see where the interest rates are. I personally highly encourage a credit monitoring service and locking your credit reports when you're not applying for credit. This prevents people from applying for credit in your name and doing anything like shady they shouldn't do. That's just a little banker in me telling you that. Other little weird tidbits is that anytime you can pay with your credit card over your debit card is better, because believe it or not, the fraud protection on credit cards is like really aggressive. They're much higher level than on a checking account. All right, so some more little just tips from a banker. As I said when I first started this, often we fail not because of the plan, but because of the thought process behind the plan or commitment to it. Often people overcommit to budgeting. If you feel broke when you're budgeting, if you feel broke when you're paying down your debts, you're never gonna succeed, because when you have a broke mindset, it literally makes you think that you're broke, and it stops your income from coming in. It stops you from doing things to take care of yourself. Yes, you're gonna have to spend money every single month, but you can make smart choices with your money. Instead of eating out or picking up a coffee somewhere, cook at home. We're at the point now where when we go out to eat, we're always disappointed because we make food better at home because we've taken time to learn the skills together. The only time I've ever buy coffee when I'm out usually has to deal with the fact that I forgot to buy coffee, for my house, crying through the house. So just start making smart choices. If you love working out and you want a gym membership, then pick a gym membership that you can afford and go work out, because that is going to feed into your body, into your mentality. It's going to put you in a place for success. You need to set yourself up for success and not judge yourself. When I was working in banking, I saw people who had hundreds and thousands of debt, hundreds and hundreds of thousands of dollars in debt. Some of them went to medical school and then they also became a lawyer. That guy had something like $350,000 in student loan debt. And I was just like, whoa, that's a lot of debt. Plus they had a home loan. Plus they had credit cards. They were I think $750,000 in debt. And the guy was cool as a cucumber because he had just landed a job making $1 million a year. And he's like, oh, I'm just gonna keep on living in my parents' house and pay this off quick. Don't be afraid to step into some choices that are maybe it's your psychology, your brain is telling you, oh, this isn't a good idea. But living with his parents was a great idea. He got a high-paying job. He had absolutely no ego issues. Moved in with his parents after school, paid off his debt, saved up money, bought a house cash, and was in a good place. Now we're all not making that kind of money, right? But those are the choices that we can make. Now, I promise you I'd circle back to student loans. I personally have student loans. I personally think they are very predatory. My thoughts on them being predatory does not change the fact that I have student loans. I have them, they have to get paid back, I pay them back. That's how it is. Now, if you are in a career path where you can apply for the student loan forgiveness, you should definitely pay attention to that and file that and report it. And I would keep records on it and apply for it. If you're able to pay back with the the income driven repayment plan, apply for that. Look at the options. Just because they say this is how much you have to pay and when, think about what makes sense for you. If you're able to move in with someone and like your parents or a family member and pay heavily on your student loans to get them done quicker, do it. Because every day you have them is just accruing interest on the previous balance. I mean, how many people have you heard say, "Oh, I paid my student loan, minimum balance, and now I owe more money than the month before"? That's because of how they're set up. So you just have to look again in your situation and just do some critical thinking. Does it make more sense for me to pay them down quickly? Or am I in a place in my career where I'm not making that much money and I should accept one of their other programs? And again, reassess that once a year. Make good choices for yourself. Don't listen to just one person. Don't listen to just me. Listen to a couple other people and see how it impacts them. I would say that one of my biggest regrets is taking out student loans because I feel like I pay on them all the freaking time and they just keep on just sitting there. I definitely am going to put them on a snowball plan moving forward to get rid of them. But we're just not in a place right now where I'm able to do that. And guess what? I'm not beating myself up over it because I made the choices I made. I got my master's degree. I was a counselor for a number of years. I really, really enjoyed that career path. I still use counseling in every single business that I opened, so it definitely was not a waste of money. However, I do think the way student loans are set up is very, very poorly done. But here we are, and all we can do is make a plan to move forward, right? So other concepts that people have talked to me about is not sure what to do when it comes to health insurance. I used to be a health insurance agent, and what I can tell you is there's a lot of different health insurance out there, and there's a lot of different ways that they pay. What you should do is go to a qualified individual and review those options. If you're able to apply for some sort of assistantship, I highly recommend that because that'll help get down your premiums. And then you should really just look at how often you get sick, how often the people in your family get sick, what kind of family history there is to determine how much you really need of coverage. It's really sad that we live in a day and age where we can't all just have good coverage, but that's just not feasible. For a family of 3 or 4, it's $2,000, $3,000, $4,000 for health insurance for maximum benefits. And if you really think about it, if it's $3,000 a month, at the end of 12 months, are you really spending $36,000 on services that you should be paying out for the maximum policy possible? Maybe it makes sense that you have a different policy. Again, this is just looking at numbers, very, very cool, calm, and collected, and just thinking about the impact if something happened, the impact if nothing happened, what are the probabilities? Because that's what they're doing with you. They're doing all kinds of probabilities when they look at interest rates, when they're giving out mortgages, when they're talking about health insurance. There's an actuary figuring out what they need to do, and it's your turn now. You're not going to school to be an actuary. You're simply just going to start looking at the information that's provided to you and really reviewing it. If it feels like it's overwhelming, simply just take a pause and find a buddy to do it with you. Find somebody who's good at budgeting. Find somebody who's good at looking numbers. Find somebody who doesn't get nervous about debt. Find somebody who's not going to judge you, and just sit there and talk about it for real. Because I can guarantee you, from somebody who's been in the banking industry, I don't think I've ever looked at an account that didn't have debt on it. I don't think I ever met a person who didn't have a business loan or a credit card or an auto loan or a home loan. I don't think I've ever met a person, aside from maybe a handful of people, who are never late. Things happen. People can have accidents and then they forget to pay a bill. A lot can happen. So don't beat yourself up on whatever situation you are in right now. Just look at it, see the good, be very proud of yourself for everything that's good. And if it's only you paid your cable bill last month, then that's fantastic. Be proud of what you're accomplishing, and then take a breath and then create a plan to move forward, because you can do this.